Hey guys, Nick Kellar, Greg Brock. We are rejoined by the one and the only Matt Nader for another video blog. And today, with all that's been going on with coronavirus and the economic markets getting smashed, we thought we would bring to you what's going on with interest rates and how that affects you. So brought in the foremost expert, Matt Nader. What's going on here?
Thank you, boys. Good to see you guys.
Yeah,
you too, buddy. Well, market's very volatile right now. There really isn't a direction. I don't think anyone knows where we're heading and what's going on. This really backs up 4 or 5 months ago what kind of started our decline of interest rates, and it really started with tariffs and trade wars. So as that started, we saw at the time our market was the mortgage interest rates were starting to increase. Since we started to trickle in a downward direction. In the last 3 weeks, 2.5 weeks, I guess, we've seen 50-year lows. It might be all-time lows of historic mortgage rates.
We thought we saw lows a couple of years ago.
Right, and we're lower. And it's going to be contingent upon what the markets are doing, really what this virus does. The coronavirus has had a serious effect on the equity markets. Mm-hmm. So we've seen the Dow in the last 2 weeks. I haven't checked it right now, but it's almost 4,000 points off of its all-time highs.
Oh, sure. We know.
So with that being said, monies are going one or the other. It's equities or it's typically going to be the bond market. What's happened is everyone's going to the safe haven and putting monies into the bond market.
So is it a fear factor thing?
It's a fear factor thing. It's the fear of the uncertainty is really what it is right now. It's when does this stop and how does it stop? So for the real estate market in itself, it's been fantastic. You look at a buyer looking at a $200,000 property 5 weeks ago, their affordability is the same at a $230,000 property as of today. You're looking at a $400,000 property, it's probably $475,000.
Wow.
That your affordability in regards to the interest rates, when you drop 100 basis points, 1% in the rate, right? That's how much more somebody can afford.
So it's really affected on how much people can afford their purchase power.
Absolutely.
Wow.
Right.
Awesome.
Anyone that's bought a home in the last really 3-4 years, if they're in the 4%, they should reach out to their lender and look and see if there's the ability to refinance their home.
Speaking of that, when is that not the case? When should somebody, if they're looking at these rates right now, who are the people that shouldn't be refinancing?
The people that shouldn't be refinancing are the ones that have a short-term plan to sell their home.
Got it.
There's always, a refinance comes down to the cost and the savings and then the recoup time. Mm-hmm. So if it costs X and your savings is Y and your recoup time is 3 years, but your intent is to move and sell or sell and move out in the next 1.5 years, yes, you can save on a monthly basis, but in the long run, you've spent more money to save that on a monthly basis.
Got it.
So it really is, it's the calculation of when you expect to sell your home. Alternatively to that is also if there's somebody that's in an adjustable rate mortgage now and they'd rather get into a fixed rate, yeah, they might be selling in a couple of years, but it gives them a little bit more sense of security with a fixed rate.
Okay.
Awesome. So basically anybody that's bought in the last few years or has a higher than 4-ish interest rate, they need to look into this unless you're potentially going to be selling your home relatively soon.
Correct.
Okay.
Yeah.
Okay. So keep that in mind if that's you. And then how's that impacting the real estate market?
So right now we're seeing, again, buying power coming up. People that might not have been able to purchase at all are now coming into the market, into that $150,000 to $200,000 mark. We're also seeing people that didn't think they could afford the home that they want now suddenly be able to afford it. But we're still having inventory problems. So we've got a lot of frustrated buyers out there that are circling on all kinds of properties and they're getting snatched up fast. We're also seeing property values creep up really, really quickly right now. We're seeing historic highs in some neighborhoods here in Westminster, specifically some of the townhome neighborhoods. So it's really affecting our market quite quickly.
So as always, these things are always specific to your circumstance. So if you have any questions, you reach out to one of us and we'll be happy to kind of help customize what might work best for you. If you have any questions, feel free to reach out to us. As always, thanks for your support.
Thanks a lot.
See you next time.